5 penny stocks that are absolutely crushing it this week. NUAI Energy up 450+%. Datavault AI surging over 165%. I got 3 other ones to look at. Let's find the next explosive penny stock moves. Stay tuned. Welcome back to StockScope Live. We're not speaking very loud today because I'm recording pretty late at night. If you're new here, my name is Ali, and we're going to break down some of the hottest penny stocks based on actionable insights. Before we jump in, let me be crystal clear. These aren't random picks based on hype or some random Reddit chat. Where each of these stocks is moving on real fundamental catalysts. We're talking major partnerships, multi-million-dollar contracts, and game-changing business pivots. In the next 8 to 10 minutes, we'll cover entry points, price targets, and most importantly, the critical risk management strategies you absolutely must use when trading penny stocks. Because while the upside can be incredible, the downside risk is equally real. Let's dive in. All right, we're going to break this down in 2 parts where I'm going to blab about what happened, and then we're going to look at the technicals on the chart. First, this is an absolute beast of a week for NUAI Energy, ticker NUAI. The stock gained astronomical amounts, over 450% in just 8 days. Let me put it in perspective for you. If you bought $1,000 worth of shares 8 days ago, you'd be sitting at around $500 today. So what's driving this insane moves? Well, 3 massive catalysts hit all at once. First, they announced a complete business pivot from helium exploration to AI infrastructure and data centers. This isn't just a name change. They're partnering with Texas Critical Data Centers to develop a staggering 250 megawatts of capacity. That's enough power to run a small city. Number 2, they secured a collaboration with IBM to integrate their AI solutions with IBM's Watson X platform. And you know, when a penny stock gets validation from a blue chip company like IBM, that's when smart money starts to pay attention. And lastly, timing couldn't be better. The AI infrastructure demand is exploding, and data center stocks are some of the hottest plays in the market right now. Now, let's look at the technical side in the chart. As you can see, 8 days ago, we were sitting around 32 cents, 0.4. And it shot up about 680% from there to around 250. It wicked up all the way to 265-ish and then went back down to 250. Since then, it's seen some correction. Obviously, with this massive gain, some people are going to be selling. And we saw some massive amounts of buying happening right around September 23rd. 221 million shares traded in volume on that day. The next day, 78 million. The next day, 157 million. Then we had 73 million again. So we're seeing some slowdown in volume, which means that we're supposed to be building some sort of support level. Now, this stock has only really existed on the stock market since August, so we don't have a lot of history. But we do know our entry zone is between $1.80 and $2.20. We do know that there is really no real support line right now. So I think that this is a good buy zone, a good pullback from before. I'm guessing that our support line is probably going to be around $1.70, and then our target is going to be all the way up at $3.50. It's a bit of a speculative play, but there should be enough momentum to carry the stock higher than it was today. Let's move on to number 2. That's Datavault AI, ticker DVLT. This has surged about 165 to 225%, depending on where your entry was. This one is particularly interesting because it's riding 2 of the hottest trades in the market, AI and Bitcoin. Let me explain what happened. Datavault AI just secured a massive $150 million investment from Silex Holdings, and they paid them in Bitcoin. This makes Datavault one of the first AI companies to have significant Bitcoin holdings on their balance sheets. It gets better though. IBM, again, has committed 20,000 hours of engineering support. That's worth about $5 million in consulting value. Let me tell you, IBM doesn't just throw around free engineering hours, folks. This tells us they see serious potential in Datavault's AI data monetization platform. You might be asking yourself, what the heck does this company do? Is it AI? Is it data? Let me explain. The company's technology allows businesses to monetize their data using AI agents built on IBM's Watson X platform. Basically, think of it as turning your company's data into revenue-generating asset. With the AI boom in full swing, this could be huge. From a technical standpoint, DVLT broke through major resistances at $1 and is now consolidating around $1.10. I'm looking for entries between $1 and $1.15 on any dip, but my price target is at $2.50. And if we make this smaller, our target is all the way up there. And that gives us about 100 to 135% gain. Now, this is more than double the current levels. Remember, with great reward comes great risk. Set your stop loss at 85 cents if you enter around $1, and don't let emotions override risk management. All right, let's move on to number 3. Bitfarms, ticker BITF. Now, this is a little bit of a different play. And Bitfarms basically surged around 11% on Monday with a massive 71% increase in volume. Now, that 11% might not sound as exciting as triple-digit moves we covered in the previous two, but here's why BITF is still compelling. Bitcoin mining stocks are incredibly leveraged to Bitcoin price movements. When Bitcoin goes up, mining stocks typically go up even more. With Bitcoin recently pushing towards new highs and institutional adoption accelerating, mining companies like Bitfarms are positioned to benefit. The company operates mining facility across North America and has been expanding their hash rate capacity. They've also been getting analysts' love lately, with a consensus price target of $3.95. That's about a 38% upside from the current levels. What about BITF compared to our other two picks is that it's slightly less volatile while still offering solid upside potential. It's trading around about 280, 282 right now, and I'm comfortable with entries between 275 and 285. That's a pretty tight entry zone, as you can see here on the chart. Their support right now sits around 250, and our target is around 350. Now, we did hit that target, close to that target before. It wicked up, went back down. So we think that that's also going to act as resistance. But right now, the last high was 360. That's why our target is 350. And we can see if we scroll back out that it was on a downwards trajectory. It did the double top thing, and then it shot up. So I think that this stock has a potential for that upside. And if we take a look at their current entry point to our target, that's about 25%. And you can either wait until it tests down around 250, 260. And if you enter around 250, that's about a 39% upside. The key catalyst to watch here is Bitcoin price action. If Bitcoin breaks through the current top, mining stocks like BITF could see another leg higher. But if Bitcoin rolls over, these mining stocks will feel the pain first. Okay, let's move on to our last one, which is Medirom Healthcare, and this one is nice. We got a lot more data with this one, and I like that because it makes it easier to predict. Ticker MRM. This is a Japanese healthcare technology company which just landed significant contract with the Japan Ground Self-Defense Force for their Remini system. Here's why this is a big deal. Government defense contracts provide stable, reoccurring revenue streams. The Remini system is essentially an advanced healthcare monitoring technology that can be deployed in military and civilian applications. But that's not all. The company just announced plans to expand their ORB therapeutic robot to over 200 locations. This isn't just about defense contracts. They're building a comprehensive healthcare technology ecosystem. MRM saw a pre-market surge of about 219% on this news, as you can see on the chart. And what we saw is while it pulled back from those highs, the fundamental story remains intact. The combination of defense contracts and healthcare AI positions them perfectly for the current market environment. I'm looking at entries between 220 and 250. Currently, we're sitting around 212. which means that we are below that level. And we're not seeing the real support line. And I think the real support line is around $1.85. Now, obviously, there was a lot of people who took profits, and that's why the stock surged with a massive 65 million shares traded on that day. And then it went down and down and down because most of the buyers were down here around the 180 mark. So all of that was profit taking. The underlying fundamentals continues to be strong. So how do we enter this one? I'm probably going to wait to see what happens over the next couple of days. If it tests the 20-day moving average, that's going to be my lowest entry point. This is the most value. You're looking at around $1.85. And I feel like the 20-day moving average, we're going to see a bounce back. Our target is not the top. Our target is going to be around 350. And we think the resistance is somewhere between 4 and 450. And if we scroll out or zoom out, you can see that this stock has traded much higher than this for a while, around $6 way back in time in 2024. And before that, it was still around the $6 until you keep going back far enough and you see the stock started way back in 2020 around $15. So we know that there is massive upside from here at $2.12. And with all this news that we're seeing from them, you should be able to gain some momentum. Before we wrap up, let's quickly touch on 2 ETFs and make sure that we talk about risk management. The biotech sector has been heating up. Several companies announcing trial results and partnership deals. Keep an eye on sector ETFs like XBI and IBB. Now, here's the part that could save your trading account. Risk management. And I can't stress this enough. Never, and I mean never, risk more than 2% of your total account on a single penny stock trade. These stocks can drop 50% just as fast as they can rise 100%. And always use stop losses. I don't care how much conviction you have in a trade, set your stop and stick to it. Emotions are the enemy of trading. Taking profits along the way is always the rule. You need to sell 25% of your position at 50% gains, another 25% at 100% gains, and let the remaining 50% ride with a trailing stop. This way you're locking in profits while still participating in the upside. And position sizing is critical. Just because a stock is cheap doesn't mean you should buy more of that stock. Okay, guys, there you have it. 5 penny stocks making major moves with strategies to trade them. If you found this breakdown valuable, do me a huge favor and smash the like button. It helps the YouTube algorithm show our content to more investors who could benefit from these insights. Make sure you're subscribed and hit the bell icon for notifications, because penny stock moves fast and timing is everything. Make sure that you comment below. Let me know which of these 5 stocks caught your attention, and are you already holding any of them? What's your favorite penny stock? Because I read every comment and I love hearing from you. Remember, trading penny stocks can be incredibly rewarding, but it requires discipline, patience, and rock-solid risk management. Never invest money you can't afford to lose, and always do your own research. That's a wrap. I'm your host, Ali. Stay engaged, stay diversified, stay safe, and I'll catch you in the next video.